Man, I know. Early morning level without a doubt. I'm nerding and we nerding out. Cause we got levels on levels on levels on levels on levels on levels on levels. We set them. We set them. Pre-market out for the Lions is ready. Coin wise salmon and salmon, we steady. Deep cheers when the knowledge connecting. Wise lions studying with patience. Man, that low. In the morning, I'm nerding and we're nerding out. Early morning levels without a doubt. Calling the zones in the structure. Pre-market nerd out. That's all that we about. Shout out to coin wise. Cause we got levels on levels on levels on levels on levels on levels on levels. We set them. Why you be all on the trot if you rushing? Why you not marking the levels of soaking? Wise lions patient, we build it for structure. Man, low teaching the code to the public. Coin wise outfits flowing abundance. Knowledge and discipline stacking the hundreds. Every reaction the lions know how I'm coming. Lions brigade when candles start pumping. Uncle for the bell ringing, the lions on a mission. Studying candles, levels, and timing with precision. A boobalito in any market condition. Coin wise with Kimba Lions dominating the competition. We got levels on levels on levels on levels on levels on levels on levels. We set them. We set them. Pre-market off for the Lions is ready. Coin wise family and family we stay. Big cheers with the knowledge connecting. Wise lions studying with patience. Man, that low. In the morning, I'm nerding and we nerding out. Early morning levels without a doubt. Calling the zones in the structure. Pre-market nerd out. This all that we about. Shout out to coin wise. Cause we got levels on levels on levels on levels on levels on levels on levels. We settle.
Yeah, how we doing? How we doing? How we doing? Let's go. All right, we good. We good. There we go. Feels a little more like a happy FOMC Wednesday. Welcome to another edition of FOMC Stream with Kimba Gang. I am your host, Mandalo, joined by my co-host, Housty and Cage. Special guest appearance from the new Fed chair, Warsh. He'll be making his appearance in about 57 minutes from now. We have some fireworks upcoming. Little bit of a game to play. The math is the math. What's our probability of a rate cut? Or we have no rate cuts and we still blazing. Let's go! Housty Cage, how we doing?
Doing Gucci. How we doing? How are the Lions?
Doing great. Let's go, Karoon. Dr. Manhattan. McKillum. XLRD. Syed Curvies, Buzz Cree, shoutouts to PSG, 10 Binds Berkey, MJ, Bud Fox, Syed, MEXC 83, let's go. Shoutouts Colin Noob, Accelerate, 10 Binds, Curvies, Karoon, Pedro, Samuel, Nix, let's go. Yep, predictions up. Get your predictions in if you want to play. Let's go, Kimba Gang, always. Let's go, Neil. How you doing? Buzz Cree, Xenon, Dr. Manhattan. Fasten your seatbelts, strap on your helmets, your spacesuits, your diapers. Get your Lituche and your juice, and let's go for a ride. Episode, yeah. Maestro, shout out to Maestro. Who juicing? Shoutouts to the entire team, the mods, admins, developers, video, graphics, and all of the OGs and veterans. Let's go. And of course, the Kimba. Of course, our official stream sponsor, the official sponsor of the FOMC, the one and only CoinWise. And of course, the exchanges which offer the juiciest rates, the best liquidity, exclamation dashboard. Let's go. We back, maybe. Let's go. Yeah, shout out to maybe. Yeah, I want to look at those plays. Let's go, Vladimir. Shishi Booey. Or rips. Maybe. You know what it is. Predictions are up, but I think that it's going to end like right the second before the rates announcement. So you can kind of, you know, swoop in and do it again. How's that sound? Young Kaizen, how we doing? Vladimir. Who's ready for some bingo? Cage got a red shirt on.
Shout out Kevin Warsh. Started a CoinWise feed today.
Shoutouts to Warsh. Last second counter traded. Yeah. The points for. Oh shit! Shoutouts to CoinWise. Giveaway! Exclamation! CoinWise Juice. CoinWise Basic subscription. Get in there. Exclamation CoinWise Juice. If you're in the YouTube, please log into the Twitch really fast. You have enough time to do so. You don't have to leave YouTube, but just to enter the giveaway, it needs to be through the Twitch. It's just how it the system works. Yeah. Dokong did it the last time and swooped in from all the Twitch users. Sammy, how you doing? Let's go. Afna Gunka. Helmanok. Santilli, we identified this. 7440. 7340, my bad. Exclamation CoinWise Juice. K Tuesday, you got anything to say?
That's CoinWise. Got that new CME data. Check it out. Free dashboard, right, for everybody that doesn't have a sub. Bunch of good tools. But if you do get gifted this sub, you can check out the education. Some of the free education, sorry. Get access to some of the basic tools. Joy.
CoinWise.com/dashboard.
Or just spending FOMC with it? Alright, okay.
Exclamation CoinWise Juice. Let's get it. Let's go, Dick Flats. How we doing? Well, Mr. Dickflex 1312 is dropping the history of Kevin Maxwell Warsh, born on a rainy Friday, April 13th, 1970, American financier and attorney who served as the 17th chair of the Federal Reserve and a member of the Federal Board of Governors since last month. Let's go, Dick Flex. Neil! Yeah, Dick Flex, come over to the Twitch super quick and get in the giveaway. Exclamation CoinWise Juice, you got 1 minute. Oh. This song is beautiful, but we need to feel it. Groove with it, Cage. Groove with it, Eusty. Let's go. How's our liquidations looking? Little to the upside, little to the downside. Plenty of time frames to choose from. Coinwise.com/dashboard. Coinwise Juice! Congratulations, you! Welcome back, you. To redeem, connect your Twitch at the Coinwise Discord. And check your email for the gift code. Any questions, direct it to their amazing support team. Let's go, you. I'm strong if you strong, Blink John. What did we play this morning? That was the Warsh song? Okay.
You know how to
yeah, we'll play it again. It's going to be his walkout song. Congratulations, you. Yeah, we'll play it again, like right when he's walking out. You know, like the John Cena walkout song.
Let's go, you. Hey, you.
If you have an account already on CoinWise, you'll find the coupon code in your email. If you don't have an account yet, you can just make one real quick. If you do, it'll automatically send you the coupon. Find it in your email, and you can input in the subscriptions page. Enjoy. Go, you.
Dick Flex says he'll ask too many questions and he'll get banned. Yeah, just don't spam it, dude. I'm happy to answer questions. Maybe not when, like, price is just going crazy, agger's like flying. But otherwise, you know, that's what we're here for, nerding out. Kagam, let's go. Yeah, Mr. Dick Flex. Well, just treat it as a lifelong skill that over time can be huge juice rather than trying to get rich to just get out of a situation. And you'll take so much of the stress off of it, so much of the pressure, and you'll actually perform much better. But the commitment, it makes such a difference. Yep, some of the free education, some more juice is coming, and some fantastic new courses in their paid education platform, alongside some brand new indicators rolling out soon. Updates to the trading journal. I can't wait. What do you think, Age? Can you wait?
No, I think some of these new indicators are gonna really get people excited. Gonna help them a lot, especially like for some people that don't know how structured it's confirmed. We got one tool that is basically just for that. And for the people that do like auction profiles, your TPOs, we have probably one of the, not one of the, we have the fucking best. TPO profile you'll probably find on trading. That's one bias.
But you're seeing the weekly profile on right now. CoinWise weekly, right at our weekly point of control, and at settlement on CME. S&P went for those bad lows. Big boot gamma's down here, and it did hold. Held this to the pixel. This is index. Beautiful. We went through all the new tools on Monday, and we're going to continue doing so. But right now isn't the time to be nerding out too hard. It's time to be prepared. It's time to be prepared. So what I'm seeing here is we broke structure, and now this is turning into resistance. We got our point of control up above, EMA up above. I am not showing VWAPs. Help me out here. That's not the one I wanted.
On a weekend.
There we go. VWAPs up above as well. But we are trading above session VWAP right now on just index. How about on ES? So back inside 7,400, back above our support line on the half trend. How about EDV on this one? I need to throw that chart on here. I'm probably not about to do that right now. But weekly value area low. One crazy mother, shut your mouth. And Synthesis Futures. Oh my goodness. Look how close it is to those lows. Holding that is bullish. You just got to get back inside here. That's going to be a good sign for continuation. And perhaps even these highs up above, which are bad. Shout out to the new TPO and the purple bad high along with the traditional monthly VWAP. Right there. Let's get it. Yeah, we just need to accept back inside value and ideally above weekly VWAP and point of control. Previous month POC would be an added bonus. Just watch out for the settlement right there. These are trend candles. They are based on the new confirmation matrix from CoinWise. Yeah, it's at EMA Cloud is the ribbon. Yeah, we went through it on Monday. I think that right now is probably not the time to fully explain it, but what you want to find is you're gonna look for confirmation. So what you have is trend, RSI, structure, volume, and CVD. CVD is the starting point, and volume, you want either red At the highs are green, at the lows you need 2, and then you need one more piece of confluence to begin to confirm this as something of interest. The dots print when you have delta divergence on CVD. So coming into the lows, it just means to start paying attention. It doesn't mean that that's the short, because we just had a whole bunch of them, but it means start paying attention to your other tools. It's pretty nice. Yeah, Sammy. We're gonna be doing some extensive nerd outs on this later. Is that better? Is the sound better? It was loud to me too, but I thought we were vibing out. Maestro, let's go. Hitman Gucci. Mr. Dick Flex. Venomous Viper, how you doing? Pretty... nah, dude. Did you see all the TA that I did without it? It's just one more piece of information, and it can help, it can really help streamline a process for people who have difficulty reading a ton of different data or making decisions. And I don't really need to sell it, I just need to show it. It sells itself if you understand it. Yeah, somebody just asked a question about it, brother. It's brand new. Brand new. What happened here? It's probably because it's in the 5. Look at that bad hive up here. Yep, we're still holding these lows right here, and that's naked point of control, naked time point of control as well. So this is Coinbase. Spot, PDEQ, naked point of controls, monthly VWAP, a lot of things for this to be support. You got a rotation zone down below. This is the ATR. You liked it more to going in a different way? You wanted to see it going up or down? It's not like fun? Dude. It's going to be available really soon, Ronnie. I'm not sure exactly when, but it is going to be quite soon. They haven't told me. They haven't told me. I think
you guys can look for it into August. You'll
into
find
August.
both these indicators out. Yeah.
Did you guys hear that?
Should be like the first few weeks of August. You guys can look at it, look out for it over on the CoinWise website. You'll get announcements in their Discord as well. They should have an email that goes out with it.
What's kind of big?
July 29th, by the way. We're almost done with
Yeah,
July.
Somewhere into August. It's like 2 days away.
Literally. Keep your eyes out. Exactly, maybe Band-Aid.
Yes, maybe. We got some big D about to drop. Is Warsh gonna help us? Does he got some big D for us? El
We got 6
Pasoto.
minutes and 30 minutes till the meeting. Let's go. Again.
El Pasoto, thank you for the resub. Happy FOMC. Let's go. Shout out to El Pasoto. 3 days, I don't know. He said somewhere into August. Orbs. I see you.
weeks to August.
Early part of August, hopefully. Hold it and bounce again. Can't make it up. All right, let's get it over to TRADFI. Get ready, get locked in, get your channel points. That's right. Let's go, maybe. Biff 'em! Ready for work. Maybe he's at number 333. I got number 444. Shout out CZ. Okay. Lock in, lock in, lock in. John Cotta. You need a new iPad? Well, let's juice up. Sammy. Right, exactly, Blink John. We were just trying to look at like goalposts, basically. Touch lines. At this point right now, I'm watching these highs and this naked point of control above us. We got the gap fill this morning. See if we can make it up here. First area of interest on the lows, to me, is maybe a clean of all of this. At least to that weekly value area, low area. Down through here. Swing fail here, looking good. Get closest down here, looking for maybe a retest and fail, or see if it can reclaim as a failed auction below. To the top side, looking for a swing fail, tucking back in, or either a failed auction and bounce, or maybe confirming back within value. At that point, I'd be looking for a rotation and still potentially targeting those lows. Holding the lows for now is good if you are bullish. Time will tell. Having some goalposts that are, you know, on either side of value, far more juice than trying to trade this shit 2 minutes before the Fed rates was the most awaited piece of information in the past 6 weeks. Thinking about the first move being a jabate? Yeah, jabate. Yeah, you see that? It's hidden, Mr. Dick Flex. Squint real hard, you can see him. I couldn't lose it all together until CoinWise comes out with something like that. Yeah, but those are the trend candles. Lock the fuck in. Coke Zero's juicing his ass off. Dropping subs, juicing up. Vibing out, nerding out. Shout out to everybody that's here joining us today for the most anticipated event in the past 6-7 weeks. You gotta do it. Maybe Band-Aid's 6-7ing. Tippity tap tap. Let's see a tippity tap tap in the chat. Let's go. Oh shit. Oh shit. We have officially 20 seconds to go. You want to see Binance? Rate cuts. How you doing, fellow kids? Fellow youthers? Let's go, let's go, let's go. What's it gonna be? Woo! Fly! Fly! No rate cuts, but we still blazing. Oh my goodness. The market's bullish that it just wasn't a hike. John Cotta, Baldicular, Pedro. I see you. Happy 420. Let's go, Ludo. Orups, I Samuel. El Pasoto, maybe MEXC 83. Mork. Syed. Calling noob. Curvies. Kachoy, Zandoka. Let's go, Mr. Dick Flex. You see if Binance got something big going on? Not really. I mean, they got some big orders above around 65.2 and then a little bit down below in the 63.4 area. 63.4, 63.5. Is there a live stream? Yeah, there is. Not yet, though. It's going to be at 2:30 New York time. Yeah, we're going to be streaming it. We're going to play bingo. And I guess I can fire at the bingo cards. Anybody have a last minute turn that you think that would be a good thing in the bingo board? We already got Task Force in there, so don't even like spam Task Force in the charts. Holding the rates. Yep, so I guess we're gonna prepare for this reaction at the upside. And maybe the settlement. We've got a little gap up to here. 74.67. That shit like ruined me, dude. The stupid fucking 6.7 thing. I can't even say 67 anymore without. Yeah, baby gap. It's basically filled, but it's not. On index. The music's still too loud? Is it really? Thanks, Sammy. Yeah, over on YouTube, they're saying it's too loud. Yeah, it sounds okay to me. Yeah, thanks, Trackalicious. Shishi Buoy juice on the long spike, still going. BitBase also 4x. Oh my goodness. Juicing on the giveaway. Shout out to Shishi Buoy. Congratulations, brother. Nice work. Nice decision making. Okay. No other You're using the same headset? Nice. Yeah, it's a nice one, dude. I can't wear that thing over my ears for extended time. But yeah, it's very comfortable. Yeah, I do love it. Okay, no word suggestions. We're gonna lock the pool and start. Join bingo. No exclamations about it. Join bingo, join bingo, join bingo. Get in there! Mr. Dick Flex, come over to the Twitch if you want to get into the bingo. Just log into it like for 1 second. You can watch for the whole time. Dick Flex has got the popcorn going. VWAP and EMAs right now. Join bingo. Let's make sure this board looks okay. Join bingo, join bingo, join bingo. And put the card over here for right now. I don't know, man. I'm gonna make it real small. Join bingo. Ooh, that's a good place for it for right now. Join bingo, join bingo, join bingo. No exclamations about it, just join it. Yeah, the glasses too. I do like them, but I just don't like them on for a very long time. That's true. I go back between the two. Task Force is on there, dude. But Family Fight, did he really say that? You're the second person that said that. Fuck. Put it beside the volume. Like down here. On S&P. That gets it a little bigger. It's going to be bigger when we have the meeting going. Yeah, I can make adjustment like that. I was just trying to get it on there. Join bingo. Yeah, good suggestion. Thanks, Trackalicious. Shoutouts Rancho. 64,693. Coinwise Gex. That's what you're looking at right now? I see you, I see you. Mostly I'm looking at 63,649 and see if we can hold that or end up back down there. That's where our good old Gex flip is. Join bingo, join bingo, join bingo. Yeah, it should be fun potentially to win some prizes. Just enjoy the meeting a little bit more. Listen to what he has to say. Shout outs to Warsh. Shout outs to Cage in developing this super fun game. It's a great way to spend the FOMC stream. Which gap? The S&P gap? It is more bullish to completely fill it. It's more bearish to not fill it, especially if we start trading back outside where the gap was. And you see that's where the gap, it's rejecting where we opened up. Session open right here. So that was the gap. Pink line to this line. Pixel. Even though it did partial fill, it was a small gap. That's what he said. Join bingo, join bingo. Oh, maybe. Shit, we gotta pay these out. 5 minutes. It was green, wasn't it? Yeah. All right, let's pay him out. You would have won too, maybe. I used to do that too. Let's go. 1.54 million channel points just got doled out. Shaloob is the biggest juicer. Varun is the biggest Kachoy. Varun, you'll get him next time. Just don't double up on the next one. Mr. Anderson, thank you for the resub. I know, dude. El Pasoto, let's go. Won over 100,000 points. Aside from the NFT, the channel points are the second feature of finance. So just don't forget that. Join bingo, join bingo, join bingo. We have 49 players so far signed up. Let's get it to 69. Come on, we need 20 more participants. We have 900 and, well, we have, I guess maybe 82 iPads and 800 or 82 viewers and 850 iPads. Come on, even if we got 82 viewers, we can get it up to 69 participants in the bingo. Who doesn't want to win stuff and enjoy the game? Let's get it. Come on now. Here we go now. Nice, maybe. Hey, congrats, dude. Keep it rolling. Pellman. Supermate. Join bingo. Let's go. Sayed, let's go. Taking profit. Spurgus. Good tech. Let's go, Mr. Anderson. I-19, yeah, it's definitely more bullish in my opinion. It's more bearish if it rejects. You can think about that like single prints. You can think about that like levels that might be front run, especially if it changes structure. That gap is so minimal though. It's virtually not even an imbalance at this point. And I think that it was closed on futures anyways. Yeah, there wasn't a gap on futures, I don't think. What's that, 73.63? Did we mark that before? No, it's just an important level. The fuck's that? It's just sitting there for... Is this going to be the higher low?
FOMC is near, but we meditate.
Are we locked in? Join bingo, join bingo. We have 51 players signed up now.
Don't lose faith, just let it flow. Believe in the cycle, my friend. That will be the return again. The return of the rate cuts. Rate cuts are coming.
We got 2, but not 3 yet.
Rate cuts are near. Jerome will speak. Kimba won't fear. If the Fed don't cut today, let your patience lead the way.
Since I don't have on single prints right now anyways,
The candle light your path.
just keep an eye on this.
Let them stress, we breathe instead.
Maybe I'll even turn trend candles off for
Not what's said.
temporarily.
How slow, but we still trust the return
Temporarily.
of the rate cut. Rate cuts,
Let's see what we're working with.
rate cuts bring peace. Let the market exhale. Let the Kimba release.
Let's go, Syed. How you doing, net runners? Manaka. Mark. This is like unfilled rotation. We have it.
That's
We
cool.
have unfilled rotations. Yeah, we were reviewing some of these unfilled rotations before. All right, the new playlist. To make sure that we're ready for the Warsh walkout. We got 12 minutes. To the balcony! This candle had a lot of single prints. On which session? On RTH? It's not even closed yet. What do you mean, Mr. Dick Flex? Where? There's no single prints on this one. Not on this layout. It's time. Let's go. El Pasoto. Lock in. Join bingo. Join bingo. Join bingo. Yeah, there's no single prints though. I need a Kangol. I'm gonna start rocking Kangol hats. What do you think, Housty? Can I pull it off? Or just my avatar? That's Houston's response. Kangol hat, yay or nay? How the moves on this bell curve? I mean, that's your daily value area high that we are rejecting. And daily point of control right here. So our bell curve, if you want volume, let's do it as simple as we can. We're in value still. And on a TPO profile, it's going to be a little bit bottom heavy, I think. A little bit more of a B. Now it's kind of D. Hit him with the D, but it is a little bit more bottom heavy. Yeah, this is volume. Hee emotes, that would be juice. Shout out Shishi Bui. Join bingo, let's go, Maestro. Those ticks are $50. And my single prints are on $2 ticks. But I don't have any single prints shown right now. Just on the coin, on like the perps and Coinbase chart. And we're looking over there on Coinbase. How's that candle? Snap diddly. Yeah, on a 30-minute candle. Ugh. Yeah, I got wide ones for the, I kind of like having a nice wide point of control like that, even though it like tells you the precise price. It's kind of cool to have it a little bit wider, and same for like the highs and the lows. But I especially have larger tick size for the highs and the lows. Let's go Coke Zero. Clear and validation. Smashing it. Once again. I mean, these highs are terrible, but we've talked about this many times. Bear trends hold bad highs. Bull trends hold bad lows. And at times of uncertainty, we will range until something catalyzes a breakout. It could be news, it could be participation. It could be a little of both. We are at the kind of apex of catalysts for the summer, basically, ever since the last FOMC meetings, aside from geopolitical events. We're at the mercy of headlines. This is one thing that we can plan for, which is beautiful. Coke Zero is following his plan. See, I miss trades because I'm a liquidity guy. Scalpers are juicing. Cage, you trading this? I missed it. If I wasn't streaming it, I probably would have taken a shot.
Yeah. I've got a few shots open there. I got a shot.
Yeah, from the highs is a different story. And from the, basically from the bottom. All right, 4 minutes. I'm going to the balcony really fast. Can y'all hold it down for like 1 minute? Can't lose. Let's go, Coke. 0.64, 580. That's a beautiful level. Hold it down. Hold it down for like 2 minutes. Come on now. Come on now. Join bingo. We got a couple minutes. We have 57 players in. We're trying to get to 69. Join bingo, join bingo, join bingo. You got a couple minutes before it locks, before Warsh walks out. I know I'm going to be locked into this meeting. If these dudes on YouTube do it again, I swear. There we go. They always do this. It's all right. All right, this is coming up in 2 minutes.
Shout out to the blessed. Coke TP1 done already? Let's go. He juicing.
You get instant juice like that? That's amazing. Here it is. Here's the War song.
Looks like there's a meetup ahead. Like wash might cut the rates. Feels like my profits could be turned. Like I can tell that my level's gonna change. If you could see me now, Kim, I probably let you down. But that's up to Wash. You got me begging, Kevin.
Still goes higher. Hope you guys are having a great day too. Oh, 1 minute. 1 minute.
They did it to me again. Did it to me again, but I was ready for it.
You debated.
No, I didn't get debated.
Feels like my levels is returning. Like I'm about to get out of this trade. If you could see me now, Kimba, I hope I don't let you down. But that's up to Wash. You got me begging, Kevin.
They fucking keep doing this to me, man.
Looks like FOMC again. Feels like the data close.
Good day.
Great stuff.
My second FOMC committee
Alright.
meeting as
Goodbye,
chairman has
Brian.
come quickly.
Play the best bingo or
Probably
win.
too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at
low. Turn it
3.5
up.
to 3
Turn it up. Turn it up.
Continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month.
Can you guys hear it?
But it's worth repeating. The most striking
but you can turn it
feature
up more.
of the economy is the strong growth of business investment. the surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years: strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time,
Let's go, Shishibui.
we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. Sure. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message, letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady.
On strong with you, strong.
The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents.
Family fight, geez.
Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the
Gap
period
open
ahead,
online.
we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets
Check
is
out
one of
gold.
the many ways in which it affects the real economy.
Gold bond trade.
We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Here we go.
Well, I think the vote was 9-3.
Gold going for the high.
The broader discussion
Viewing it closes
to
in the
my
gap.
ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address
Shout out
the
Colby.
inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If
There you go.
inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months, we're going to refine that view and have a better judgment. And we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you've characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods, but they matter more. What are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Timmeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. we're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable, such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us, they weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Let's go, Kimba.
Chanel Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we're saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. We don't want your dot. We just want your reaction function. Part of me hears what we really want is your forecast. What we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. It's coming. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is narrow.
He said lens. Wide.
Michael McKee from
was
Bloomberg
it,
Radio and Television.
I don't know. We'll think about that one. He said narrow.
I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it, but I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. you said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already.
Biggest one.
This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys, but if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple days before it. What I felt was a group of professionals all the different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that. So we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
What you just said
Not bad, not bad.
is one of the most insanely idiotic things I have ever heard. At no point in your rambling, incoherent response were you even close to anything that could be considered a rational thought. Everyone in this room is now dumber for having listened to it. I award you no points, and may God have mercy on your soul.
Welp, that was a meeting. Congratulations to the bingo winners, Shishi Bui, Frankie, and Maestro. Yeah, I didn't respect the family fight. I did not respect it. I'm trying not to blast your ear balls out. Well, well, well. If you're not coughing, you're not juicing.
Go Shishi. Who was second on the board?
Frankie.
Frankie. And Maestro. Out of those three, who doesn't have a coin-wise sub?
Yep, and Maestro.
Shishi
Shout
just
out
won
to
that.
Better.
Yep, better. Frankie, you got a coin-wise sub?
Coke Zero. Thank you, Coke Zero. Shout out to Coke Zero. Hey, juicing. Get
Go
your
Coke.
umbrellas out. Shout out to Coke Zero.
No, I do not have.
Make sure you
Oh,
thank
Frankie.
Coke Zero if you just juiced up on a gift sub.
Coin-wise about to pop off with another giveaway here in a minute. Frankie, if Shishi and Maestro both agree, we can give you a coin-wise surprise for winning the bingo, or being at least top 3. Let's go back. X83. Juice.
Let's go, MEXC83. Thank you for the gift sub.
Shishi Shibui, what do you think? Maestro, what do you think? Should we give Frankie some coin wise? Maestro says, do it. Shut up, Maestro. Maestro shows coin wise a lot of support. Cheers, Maestro.
Do it.
Oh,
shout out Coke
There
Zero.
you go.
Shout out
Exclamation point,
MEXC83. Thank you
coin-wise
so much for
tools.
the gift subs. They juicing. You guys want to see anything before we wrap up? Sorry to interrupt, Cage.
It's okay, Frankie. Because the lines are so nice, you go over to the CoinWise Discord and you message their support that you won today's FOMC bingo on Kimba TV. They might hit you with a little surprise. Shout out Maestro, shout out Shishi Bui, shout out Frankie. Shout out everybody that participated in the bingo. Mandela does a really good job running it for everybody. Hopefully you guys enjoyed FOMC today.
Shout outs Cage for designing the bingo system. It is a difficult thing to do, to keep up with, to
go Shishi.
Continue TA. Thanks for your
You do a
patience,
good
everybody.
job hosting it, though. You got
It's worth it.
everything
It's a lot of
okay.
fun.
Yeah. Bingo makes it easy, so you don't have to do anything crazy.
Yeah. Yeah, very enjoyable. Let's go! Exclamation CoinWise tools. Let's get it back on trend candles.
Remember, you guys, be on the lookout for early August. CoinWise is going to drop some new tools for you guys, so shout out to all the CoinWise subs if you're looking forward to it. I know the confirmation matrix and the TPO is really going to juice you up, so enjoy, keep your eyes out, show CoinWise some love. Whoever wins this today will get a chance to try them. I think we'll introduce the basic versions people are looking for.
Snap diddly.
Let's go.
Oof. Exclamation CoinWise tools. You got 2 minutes. Come on now. Let's get 61, says Coke Zero.
Coke's got the level.
Yeah, don't get too excited if you hear Coke Zero, the fucking alpha trader, calling for 61 and go short in bottoms or something. He's got his plan. But you know what I said. We start getting closes down here, and then we can start making a little bit more plans about that. Let's go Coke Zero. He does have a Coke Zero pixel entry. Exclamation CoinWise tools. Come on now. Get it. Treasure train. What in the world? Let's go, Shishibui. You can still win, you just can't do the 14-day free trial. Let's go, Coke Zero. Mr. Anderson, congratulations. Ooh-wee! Shout out to MEXC83. Thank you, brother. Get your umbrellas out. Once again. Juice! CoinWise dropping some love. Shout out to our stream sponsor, CoinWise. Shout out to MEXC83, our sub sponsor, alongside Coke Zero Whale. The sub sponsor. Much love.
I'm Mr. Anderson. In there. Go, Mac. Appreciate all the support, you guys. Shout out Mr. Anderson if you need any help at all figuring out how to get your CoinWise subscription. All you gotta do is go to your email if you got a CoinWise account, grab that coupon code, go to subscriptions page, and use it at checkout. Excuse me. Much love, you guys. Thank you for participating with FOMC. Let's get it. Shout out Warsh. Warsh is kind of dovish. Go Colin, dude.
He is, huh? The
He's
markets
like
are gonna
a-
pump.
a
You know,
very
we're gonna do what
unbiased
we're gonna do.
guy.
Markets can pump. Let's go call a noob.
Much love, you guys. Welcome back, Dr. Manhattan.
I'm sorry, I keep talking over you, Cage. My Discord audio is fucked up.
You're not. Good though. You take over. Wrap it up.
All right, well, let's keep an eye on these lows. We also have earnings coming up in just a little while.
Now the session's hot. ETH is done. The RTH bell, that's where we run. The price comes close. We're watching tight.
Hold on. Give these the gap fill. 50 cents.
Apple's tomorrow.
Oh, thanks.
Amazon. Tomorrow. Microsoft is today. Meta is today. No. Yeah, those are the two big ones. It's Microsoft and Meta. And then Apple and Amazon tomorrow and Strategy tomorrow. We'll do some prep for it tomorrow. We kind of looked at some of the levels for today. Took out the highs, swing failure pattern on Microsoft, on the local highs. But there is liquidity above. Meta's not looking super great. But you got bad highs above that we could flip into support. Need to get back up. At least closes up here in the 600 zone. Yeah, don't forget there's those big gammas down below around 7,300. So we can have a couple little things up above, but those are going to be big factors, especially as we approach market close. If we get closer, yeah, 7340 I think was a big one, and then 7300. We're not sticking around for earnings. Yeah, can't do it today. If it was like Tesla or something, we would probably do it. I'll try and stick around as long as I can tomorrow for market close. I'm gonna have to run back to work. Kashi's okay. You like it?
Yeah.
We can't finish the day like this. Let's get one more hype song. What do you guys want to hear? Chaplain, it depends on what happens here. To me, we got to get back above the 65.8. If we can get back above 65.8, then 70 for sure. We're like right smack in the middle of value. It's retail arena. Our structure is not great for bullishness. We got to make a higher high. Right now we had two lower highs. Right there. I can get rid of that. And right here on the daily. If you go in the weekly, it's even worse. You know, so this is a great song for our last song. That's crazy. Yeah, so come down here, I think that 60 first. Get up here, I think 70. Could come, or at least 68 and change. You know, this structure is pretty bad. It's just lower high, lower low, lower high, lower low. It could still make a lower high like all the way up to like 74 probably. If it were to get up to 76, I think that maybe really back above 74, I think that like things might be looking a lot better. You want the music up under my voice? Dude, I can't even like, I'm gonna have to do quite a bit to fix this after the panic fix of YouTube earlier. My audio's all kind of fucked up.
Turn it up, feel it rise. 2 left.
Shout outs to CoinWise and our official stream sponsors. Shout outs to Coke Zero and MEXC83 for the gift subs. Shout outs to Kimba for giving us guidance and inspiration, bringing us all together. Big thank you to my co-host today, Housty and Cage. Make sure that you're around tomorrow morning for Kimba Live Trading. Tomorrow afternoon for another episode of Market Close with Mandalo. Shouts to our stream sponsor and the big gifts of giveaways from CoinWise. Let's go. Congratulations to Shishibui, Maestro. And hold on. Wait, who's
Shout out
juicing up on that?
Shishibui, thank you. And Maestro as well, thank you.
Yeah, thank you.
We're gonna give it to Frank.
It's Frankie.
Frankie. All you gotta do is go over to the CoinWise Discord, put up a support ticket, take care of it. Just let them know what happened. One bingo on Kimba TV today. Yeah. Oh, you already did. Sweet. Good job. I'll get with you shortly.
Shout out to Neil over in the YouTube, Mr. Dick Flex. Thanks for asking questions, brother. Everybody else that's lurking in the background, let's get it. Thank you all for joining today. Yeah, 63.6 is trying to hold. It's a pretty important level. And this right here, quite a bit of liquidity below. We'll see. Yeah, rooting for all of you. Longs, shorts, bulls, bears, we're all lions. Exclamation TX Flow for the juiciest new decentralized exchange, and exclamation BitBase. Let's get it. Yo, Squad Skiller. We're wrapping up on the FOMC meeting. More nerd outs tomorrow. Use a stop loss. Don't overtrade it. Don't oversize it. And follow your system. Trade wise. Shout out to CoinWise. Shout out to Frankie. Love y'all. Big cheers, Housty Cage. Thank you. You guys want to say your goodbyes?
Pretty sure Mandela some love. Let's go.
Later, y'all.
Big cheers, boys.
Yeah, Mandela said
Shout out
it.
to all
Thank
the
you,
Lions.
guys.
Love y'all. All right, peace out.
It's Mandalo. Early morning level without a doubt. I'm nerding and we nerding out. Cause we got levels on levels on levels on levels on levels on levels on levels. We set them. We set them. Pre-market out for the Lions is ready. CoinWise, Sammy and Salmon, we steady. Deep cheers when the knowledge connecting. Wise Lions studying with patience. Mandalo. In the morning, I'm nerding and we're nerding out. Early morning levels without a doubt. Calling the zones in the structure. Pre-market nerd out. That's all that we about. Shout out to CoinWise. Cause we got levels on levels on levels on levels on levels on levels on levels. We set them. Why you be all on the the try if you rushing? Why you not marking the levels of sunken? Why's last patient we build it for structure? Man, die low, teaching the code to the public. Coin wise outfits, flowing abundance. Knowledge and discipline stacking the hundreds. Every reaction, the lions know how I'm coming. Lions brigade when candles start pumping. Before the bell ringing, the lions on a mission. Studying candles, levels, and timing with precision. A boobalito in any market condition. Coin wise with KIMBA'S dominating the competition. We got levels on levels on levels on levels on levels on levels on levels. We set them. We set them. Pre-market off of the Lions is wedding. Coin wise family and similar we stay. Big cheers with the knowledge connecting. Wise lions studying with patience. Man down low in the morning. I'm nerdy and we nerdy now. Early morning levels without a doubt. Calling the zones of the structure. Pre-market nerd out. That's all that we about. Shout out to coin wise. Cause we got levels on levels on levels on levels on levels on levels on levels. We settle.